Welcome to our deep dive into the world of private equity.
Okay.
Today, we're going beyond the basics.
Mm-hmm.
We'll be tracing its evolution,
Okay.
examining how it fueled the rise of those tech giants,
Mm-hmm.
and even exploring a potential revolution.
Right.
Imagine private equity investments being as tradable as stocks.
Interesting.
Buckle up.
Okay.
It's going to be a fascinating ride.
It's interesting how private equity often gets painted as this exclusive club for the ultra wealthy.
Yeah.
But the reality is more nuanced.
Yeah.
Yes, it offers high potential returns, but there's also inherent illiquidity.
Right.
It's a different game entirely compared to the public market.
Right. It's not just about buying a stock and watching it hopefully go up.
Exactly.
So how did private equity evolve into this powerful force shaping industries?
Well, regulation has played a huge role.
Oh, okay.
Remember the Joe BS Act? It
Yeah.
wasn't just about crowdfunding.
Okay.
It aimed to make private equity more accessible, opening doors for a wider range of investors.
That makes sense. But let's talk about those tech giants, Google, Amazon, Apple, Tesla.
Right.
It's easy to forget that they all had significant private equity backing at some point.
Mm-hmm.
What was it about private equity that helped catapult them to success?
I think it wasn't just the money.
Okay.
Private equity brought more to the table.
Yeah.
A network of experienced advisors,
Mm.
strategic guidance,
Okay.
and an understanding of how to scale businesses rapidly.
Yeah.
Like Amazon, for example.
Okay.
Early private equity investors saw the potential of e-commerce beyond just books.
Interesting.
Their guidance and connections helped Amazon expand to new markets
Right.
and build the infrastructure it needed to become the behemoth it is today.
Yeah, that's a great point. It wasn't just a cash infusion.
Right.
It was a strategic partnership.
Exactly.
But let's not forget, for every Amazon or Google, there are countless companies that don't make it.
Exactly. And the statistics are pretty stark.
Yep.
A 50% failure rate for private equity-backed companies.
Wow.
That's a sobering reality check for anyone thinking this is an easy path to riches.
So what are the most common pitfalls that trip up these companies?
Well,
Is it just about running out of money?
cash is certainly a major factor.
Okay.
Many companies struggle to manage their burn rate
Right.
and hit critical milestones to secure further funding.
Yeah.
But it's more than that.
Okay.
Some companies struggle with market penetration, failing to find the right product market fit.
Mm-hmm.
Others simply get outpaced by competitors
Right.
or face unforeseen challenges like regulatory changes.
Okay, that helps paint a clearer picture of the risks involved.
Exactly.
But it makes you wonder if the failure rates are so high.
Yeah,
Is private equity still a viable investment strategy?
it's a good question.
Especially with all the talk about democratizing finance and making alternative investments more accessible.
That's where it gets really interesting.
Good.
There's a growing movement to address these very concerns and create a more sustainable model for private equity investing.
You're talking about the capital drill, right?
Yeah.
It sounds like a powerful tool, but I have to admit, I'm still a bit fuzzy on how it actually works.
Think of it as a structured approach
Okay.
to guide companies through the often turbulent waters of private equity.
Hmm.
It's not about quick fixes or shortcuts. It's about laying a solid foundation for sustainable growth.
Okay, I'm intrigued. Walk us through the key steps involved in this capital drill process.
It starts with creating a customized exit plan
Okay.
instead of simply hoping for an IPO or acquisition.
Right.
The capital drill forces companies to think critically about their long-term goals and how they plan to achieve a successful exit that maximizes value for both the company and its investors.
So it's about being proactive and strategic,
Right.
rather than just riding the wave and hoping for the best.
Exactly. The next step is using a proprietary modeling program to project company and shareholder value. This isn't just a static spreadsheet.
Right.
It's a dynamic tool that helps companies understand the financial levers they can pull to improve their performance and attract investors.
And the final step is what you call continuous remodeling.
Right. The business world is constantly evolving,
Right.
so a static plan won't cut it.
Yeah.
The capital drill emphasizes regular reassessments and adjustments,
Mm-hmm.
ensuring the company stays on track and adapts to market shifts.
Okay.
It's about being agile and responsive, not rigid and inflexible.
That makes a lot of sense. So the capital drill is really about bringing a more structured and data-driven approach to private equity,
Exactly.
which could potentially reduce those scary failure rates we talked about
You're
earlier.
precisely. But it's not just about avoiding pitfalls.
Yeah.
It's about empowering companies to achieve their full potential and create lasting value.
And this brings us to a fascinating question.
Right.
Could the capital drill play a role in shaping the future of private equity? A future where these investments are no longer confined to the exclusive realm of high net worth individuals.
That's a question we'll explore further in part 2,
Okay.
where we delve into a truly revolutionary concept, the possibility of private equity shares being traded digitally, almost like stocks on an exchange.
Sounds interesting. We'll be back for that.
Welcome back to our deep dive into private equity.
Right.
We left off on a cliffhanger talking about the potential for a digital revolution
Yeah.
in the way private equity shares are traded.
Uh-huh.
Imagine a world where these investments are no longer locked up for years,
Yeah.
but readily accessible on a digital exchange, almost like stocks.
Right.
It sounds almost too good to be true.
It's a bold vision.
Yeah.
No doubt, but the technology's already here.
Okay.
Blockchain, smart contracts, tokenization.
Yeah.
These aren't just buzzwords anymore.
Right.
They're the building blocks of a new financial ecosystem
Okay.
that could reshape the way we think about investing.
Okay, let's break this down.
Yeah. How would this digital exchange actually work in practice? Would any company be able to list their shares?
Not quite.
Okay.
There would need to be a robust vetting process
Right.
to ensure quality control and protect investors.
Okay.
Think of it like an exclusive marketplace where companies need to meet certain criteria:
Okay.
financial performance,
Right.
growth potential, strong management teams
Yeah.
before they can be considered for listing.
So it's not just about throwing open the doors
Yeah,
to any startup with a dream.
exactly.
There's still a level of due diligence and scrutiny involved.
Absolutely.
Yeah.
Investors need to have confidence that the companies listed on this exchange
Yeah.
are legitimate and have the potential to generate returns.
Right.
It's about striking a balance between accessibility and credibility.
Got it. Now let's say a company passes the vetting process.
Okay.
How do their physical shares become digital assets that can be traded on this exchange?
What?
This is where it gets a bit mind-bending for me.
That's where tokenization comes in.
Okay.
Each block of shares would be represented by a unique digital token,
Yes.
similar to an NFT.
Okay.
This tokenization process essentially transforms a physical asset into a digital one, unlocking a whole new realm of possibilities.
So instead of holding a paper share certificate,
Yeah,
investors would have these digital tokens representing their ownership in the company.
exactly.
And these tokens could be traded instantly on the exchange.
Exactly.
Okay.
These transactions would be governed by smart contracts,
Right.
automating the entire process and ensuring transparency and security.
Yeah.
Say goodbye to mountains of paperwork and weeks-long settlement periods.
Okay. I'm starting to see the appeal.
Right.
It sounds like a much more streamlined and efficient system. But what are the specific advantages for companies choosing to list their shares on this digital exchange?
From a company's perspective, the benefits are significant. Easier access to capital is a huge one.
Right.
Imagine being able to tap into a global pool of investors.
Yeah.
Not just the traditional venture capitalists or private equity firms.
Right.
It could democratize fundraising and level the playing field for innovative companies seeking growth capital.
It's like crowdfunding on steroids.
In a way, yes,
Yeah.
but with more safeguards and regulatory oversight.
Okay. Yeah.
And let's not forget about real-time market validation.
Right.
The trading activity on the exchange would provide companies with constant feedback on investor sentiment.
Okay.
They could see how their decisions and performance are perceived by the market,
Yeah.
allowing them to adjust their strategies accordingly. It's like having a continuous pulse on the market, guiding them towards the path of success.
That's incredibly valuable. It's like having a continuous pulse on the market, guiding them toward the path of success.
Precisely.
Yeah.
But what about the investors? Why would they choose to trade private equity shares on this digital exchange?
Right.
What's in it for them?
That's a great question. After all, private equity has traditionally been viewed
Right.
as a long-term, illiquid investment.
Yeah,
This digital exchange concept seems to turn that notion on its head.
it does.
Yeah.
And that's precisely the appeal for investors.
Okay.
Liquidity is the game changer.
Yeah.
No longer would they be locked into their investments for years hoping for an exit event.
Right.
They could buy and sell shares as market conditions change, just like they would with publicly traded stocks.
That's a huge shift.
It is.
It could open up private equity to a whole new class of investors
Right.
who previously might not have had the stomach for the illiquidity risk.
Exactly. And fractionalization plays a role here too.
Right.
Investors could buy smaller portions of shares,
Yeah.
making private equity investments more accessible and potentially less risky.
So it's not just about wealthy individuals or institutions anymore. It could become a mainstream investment option.
That's the potential, but let's not get ahead of ourselves.
Yeah,
There are still challenges to overcome, risks to consider.
right. I was just about to ask about that. This all sounds very promising,
Mhm.
but what could go wrong?
Well, regulatory uncertainty is a big one.
Okay.
While blockchain and tokenization are gaining traction,
Yeah.
the legal framework surrounding these technologies is still evolving. Clear guidelines and regulations will be crucial to ensure the stability and integrity of this digital exchange.
So it's not just about building the technology.
Mhm.
It's about creating a robust regulatory framework
Exactly.
that instills confidence in investors and prevents abuse.
Exactly. And
Yeah.
security is another major concern.
Right.
While blockchain is inherently secure, there's always the risk of hacking and cyber attacks.
Right.
The exchange would need to implement state-of-the-art cybersecurity measures
Yeah.
to protect investors' assets.
It's like building a digital fortress around this exchange.
And let's not forget about market volatility.
Right.
Private equity investments, even when traded digitally,
Yeah.
are still subject to market fluctuations.
Yeah.
Investors need to be aware of the risks
Yeah.
and be prepared for potential price swings.
It's not a guaranteed path to riches, just like any other investment.
Right.
Yeah.
And there's also the potential for fraud and manipulation.
Right.
As with any financial market, there will always be those seeking to exploit the system for their own gain. Robust oversight and due diligence will be essential to mitigate these risks.
So it's a delicate balancing act,
Mm-hmm.
fostering innovation while ensuring investor protection.
Exactly.
It sounds like this digital exchange, while potentially revolutionary,
Right.
also comes with its fair share of challenges.
It does.
Yeah.
But the potential rewards could be transformative.
Okay.
And this brings us back to a key question we posed earlier. Could this digital transformation actually help improve the odds of success for startups and private equity-backed companies?
That's a question we'll explore further in Part 3, where we examine the potential impact of this digital revolution
Right.
on the future of private equity and the broader investment landscape. Welcome back to the final part of our deep dive into private equity.
Right.
We've explored its evolution, the forces behind its success stories,
Yeah.
and even the potential for a digital revolution that could reshape the entire investment landscape.
It's been quite a journey.
It has.
And we left off with a critical question.
Yeah.
Could this digital transformation, with its potential for increased liquidity and access, actually improve the survival rate of startups and private equity-backed companies?
Right, because let's face it, those failure rates we talked about, 9 out of 10 startups failing,
Yeah.
and even private equity-backed companies facing a 50% failure rate.
It's tough out there.
Those are pretty daunting statistics.
Absolutely. And one factor often overlooked is the pressure cooker environment.
Okay.
Created by the inherent illiquidity of private equity,
Yeah.
companies are racing against the clock to achieve an exit, whether it's an IPO or acquisition, to provide returns for their investors.
It's like they're on a treadmill that never stops.
Exactly.
Yeah.
And this constant pressure can sometimes lead to short-sighted decisions, prioritizing rapid growth over long-term sustainability.
It's like sprinting a marathon instead of pacing yourself.
Now, imagine a world where private equity shares are readily tradable on a digital exchange.
Okay, yeah.
Companies would have access to a much broader pool of capital, not just from traditional venture capitalists,
Right.
but also from everyday investors.
It's like opening up the investment floodgates.
Precisely.
Yeah.
And this influx of capital could alleviate some of that pressure to achieve a quick exit.
Right.
Companies could focus on building solid foundations, developing sustainable business models, and creating real value instead of chasing short-term valuations.
So it's not just about pumping money into companies.
Yeah.
It's about creating a more supportive and sustainable environment for them to grow.
Right.
Okay.
And the transparency and real-time feedback provided by a digital exchange could help companies make more informed decisions.
Yeah.
They could track investor sentiment, gauge market demand, and adapt their strategies accordingly.
Hmm.
It's like having a constant pulse on the market, guiding them towards a path of success.
That makes a lot of sense, but let's be realistic.
Okay.
A digital exchange isn't a magic bullet.
No.
It's not going to suddenly eliminate all the challenges and risks inherent in starting and growing a business.
Of course not.
Right.
There will always be factors beyond a company's control.
Right.
Market shifts,
Yeah.
technological disruptions,
Yeah.
unforeseen challenges.
But could this digital transformation, by increasing liquidity and access to capital, tilt the odds in favor of success?
It certainly has the potential to do so.
Okay.
By providing a more supportive and dynamic ecosystem, we could see a shift from a winner-take-all mentality to a more inclusive environment where innovation and entrepreneurship can truly flourish.
It's an exciting prospect, and it aligns with the broader trend of democratizing finance,
Right.
making investment opportunities
Yeah.
that were once reserved for a select few accessible to a wider range of individuals.
Exactly.
Yeah.
And this shift could have profound implications for the future of private equity and the economy as a whole. We could see a surge in innovation as more companies gain access to the capital they need to grow and thrive.
It's like planting seeds in fertile ground, creating a more vibrant and dynamic ecosystem for entrepreneurship to flourish.
And as these companies succeed, they create jobs, drive economic growth, and ultimately benefit society as a whole.
It's a powerful vision of the future, one where private equity plays a more inclusive and impactful role in shaping the world around us.
And that brings us to the end of our deep dive into the world of private equity. We've covered a lot of ground. From its fundamental principles to the potential for a digital revolution that could reshape the investment landscape.
It's been a fascinating journey, full of insights and thought-provoking questions.
We hope this deep dive has sparked your curiosity
I think it has.
and provided you with valuable knowledge to navigate this evolving world.
Yeah.
Remember, the future of private equity is still being written, and it's up to all of us to shape its direction.
So keep exploring, keep asking questions, and keep diving deep into the world of finance and innovation.
Exactly.
Thanks for joining us on this journey.